Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. I'm not going to look at a Forex currency pair in this video. I'm going to look at a stock, and in particular Apple. And I want to look at Apple because technically it's making a little bit of a break here today. And I want to show you what that break is and what the implications are perhaps for this stock. So let's take a look. When I look at stocks, I add a moving average. I add the 50-bar moving average. Typically, I look at the 100 and 200-bar moving averages and might look at an hourly chart or the daily chart or even the things like the 5-minute chart or 4-hour chart. And I always use the 100 and 200-bar moving averages on our currency pairs. But in stocks, I like to add the 50-bar moving average. Why? Well, the reason is because stocks tend to move to the upside. Over time, you have more people in the world buying more goods. You have greater productivity as a result of technology advancements. People become more efficient, so on and so forth. That tends to lower costs and allows stocks to move higher. Those types of things tend to keep stocks moving in an upward direction over time. If you were to look at a long-term chart of the Dow Industrial Average, S&P Index, it sets higher, 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 higher over time. Now, there are times where it gets overbought and it corrects, or we have a recession and it corrects. And those corrections also tend to move lower. But if you're in a strong bullish market, things like the 100-bar moving average, even on things like the hourly chart or specifically the daily chart, may never even be approached. There's a long distance between the price and the 100-day moving average, or the price and the 200-day moving average, the green line in this chart. So I add the 50-bar moving average because it tracks closer to the trend through here. And when we look at the price of Apple here in this correction that we saw from the high price that we saw, I guess, in July to the low price that we saw in this current month, we did see the price break below the 50-bar moving average right through here. In fact, it gapped below that level, and the corrective move to the upside here intraday. You can imagine the price opened lower and then moved higher. And where did we find sellers? We found sellers against that 50-day moving average before the price then moved to the downside. You can see more clearly here now. You see the sellers against that level right there. And the price moved lower. And where do we go? We went to the 100-day moving average and found support buyers here. It looked like it might move to the upside. Then we started to trade a little bit above and below it. And then we started to use that 100-day moving average as resistance and moving down to our low price that occurred right here. That low price held above the 38.2% retracement of the last trend move to the downside. So if I were to look at this chart and analyze it, it is a trend move to the upside, a correction down toward the 38.2% retracement, and now we're seeing a rebound back to the upside. And that rebound back to the upside needs to get and take back what it broke from a technical perspective. So it broke back above the 100-day moving average and trading 2 days ago, closed above that level and trading yesterday. What did we do? We found support buyers against the 100-day moving average and moved higher. In trading here today, what are we doing? We're moving back above the 50-day moving average. That 50-day moving average comes in at $186.54. And now, from a technical perspective, the price can remain above that moving average. Guess what? The bias remains more to the upside. We could see a rotation toward, let's say, this low price here. This was the low of the day before the gap moved to the downside. The level comes in at 190.82, and that would be our next target on the top side if the price is able to stay above the 50-day moving average. So overall, this stock is looking a little bit more positive. We've had 4 trading days to the upside. We got back above the 100-day moving average, got back above the 50-day moving average. Things are looking better for Apple. We'll see if they continue going forward and are able to move toward that 190 level. Or do we fail on the break of the 50-day moving average and start to rotate back to the downside? That's what traders are going to be focused on in the short term here. If we do move lower, look for the $182.85 level to be of importance. And then we'll look down toward the 100-day moving average, which is rising and currently at $179.66. You don't want to see the price move back below that 100-day moving average. If you're bullish on the shares of Apple, that would not look too good. So there you have it, a technical look at Apple, a little explanation of the difference between the stock, my stock analysis and my analysis on foreign exchange pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.